Everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. In these updates, we talk about the news that affects the markets and then put it in perspective using our Elliott Wave charts. In this video, we'll cover the stock symbols that you see on your screen now. And remember, if there's a particular symbol you're interested in, you can click on it and go straight to it in the chapter feature in the video. With that said, let's take a look at the charts. At the time of this recording, it's late on Friday evening, so the futures market is closed. Hey, if you like these videos, please hit that like button, or better yet, hit subscribe. You'll be notified immediately when one of these videos is posted. Thanks, we really appreciate it. All right, looking at the charts, you can see that we opened to the upside today and finished near the lows of the day, and that was on a University of Michigan consumer report that came out that said expectations for inflation were increasing. That's not the kind of news that the Federal Reserve wants to see. Today was the exact opposite of yesterday, where we gapped down on the open on a hotter than expected CPI report and then rallied and finished near the high. So just reverse the 2 days, no harm, no foul, both days on above average volume. But the negative news is the fact that the inflationary data was not good, and the Fed Fund Futures is pricing in yet another 25 basis points of rate hikes, specifically the expectation that there could be 2 more consecutive 75 basis point rate hikes. That's starting to feel like we're getting an awful lot in there. Jamie Dimon of JP Morgan was warning that the Federal Reserve may be going too far with these rate hikes and withdrawing liquidity, which they need to do as well. You've seen all the stuff going on with the Bank of England, the Credit Suisse news. There's just a lot of uneasiness out there. So we like to take a look at the charts, and we can see, I want you to pay attention to this wave 5 low down there around the 330 level, because we're going to look at another chart that's going to have a nearly similar forecast in just a moment. If we put the 10-day moving average on, you can see that closed just above it yesterday, back below it today, but we still close right in that 360 area. So even with the seesaw back and forth on Thursday and Friday, there's still a possibility that we could hold that 360 level next week and potentially bounce up and create that wave 4. But we tested it once yesterday, not really a follow-through day with the reversal, big reversal day, and then back down again. So it's still looking negative, but there's a slight chance on that wave 4 bounce. Thought I'd bring the weekly chart up with that new low yesterday. You can see the wave 4 now is right around that 61.8% fib level. We talked about the possibility of going down there. Now take a look at these zigzags on the weekly chart. On the main zigzag here, you can see that we've hit the 161.8% extension. We hit it on that low yesterday. But then you look and you can see within the C wave, there's a complex C wave because there's a zigzag within it. And that target is 100% extension at 331. Remember when I said to mention, remember that 330 level on the daily chart? So now we have 2 potential Elliott Wave patterns again showing a level lower than where we were before in the 350 range. We went down to 348 in Thursday's trade. Taking a look at the VIX, really amazing to me that with what occurred on yesterday's open and the reversal today, nothing really out of the VIX, just still kind of hanging around between 30 and 35, but not even a hint of breaking above 35. It's hard to imagine what it's going to take to create a spike in the VIX above 35, perhaps one of the black swan events that are swirling around out there in the geopolitical world. Interest rates had backed off a little bit on Thursday, as did the dollar. Both of them, the 10-year and the dollar, are back up on Friday's trade. That led into the downward move on the markets, closing near the lows of the day. Some stocks of interest. Tesla. We talked about this in TradeFinder, and we said that if we break below that 240 level, and the reason that 240 was interesting is right here, you can see that's the key level there of where the triangle pattern was. Triangles get retraced. That's part of the Elliott Wave corrective triangle rules, and that was right at 240. So if we broke below that level, then we were likely going to come down and test the lows. We actually broke that low on today's close. So the lows back from May, a new closing low on Tesla. And we look at the 10-day moving average, you can see we're not that oversold, kind of topping it or touching the top of the bar, hitting the 10-day moving average. So again, not a significant oversold condition on Tesla. I think there's a pretty good chance we're going to see that wave 5 low down there around 180. It was key that we went right through that level around the 210 mark without much problem in today's trade. By the way, if you haven't signed up for TradeFinder, you can do it on this video. You can do it at our website, ewotrader.com. It's every Tuesday night at 9 p.m. Eastern Time. We talk the markets. We look for trade ideas. We have a live Q&A. It's a lot of fun. Really love to have you. We have people from all over the social media spectrum that join us. So love to have you along with us in next week's TradeFinder. Continuing with stocks of interest, AMC. This is really important here. It needs to hold right here at this 6 level. You can see that wave 3 low is exactly where the May lows were. When we turn and move back to the upside with this wave 3 here, if we can't hold 6 and try to bounce up and start that wave 4, then you see where that wave 5 target is, and that's kind of yikes. Remember, they did raise cash with the big bounces that they had back in the COVID area, so I don't think they're in any sort of danger of going out of business, but a lot of people are talking about the future failing business model if they don't do some sort of innovation. But staying above 5 at least keeps them in some of the institutions that have aggressive investment objectives, but you drop below 5 and then it becomes really difficult. So holding in this area here is going to be really important on AMC. We talked about this in TradeFinder as well on Apple, saying that I really think that there's a chance we see this 130 target. I know nobody really wants to talk about it, but we came all the way down. We got awfully close, hitting a low of 134 there on Thursday on the open when we gapped down and then reversed and back down below 140 again. So the fact that we're not in a 5-wave impulse pattern, we're in a corrective phase, we could easily come down and test that June low on Apple. Bitcoin, how many times have we talked about 18,000 and 20,000 on Bitcoin? Well, we touched both of those within the last 2 trading days. Back down to 18,000 yesterday, back up to 20,000 today. So in the last 2 trading days, we covered the trading range that Bitcoin has been in seemingly forever, but going back to June. So there's just not much else to say until we break above 20,000 meaningfully or break below 18,000 meaningfully. The stock just seems to be frozen in that tight trading range. Thought we'd bring oil back in. We talked about that last week. I asked you what you thought of oil, where you thought oil would go. If you didn't weigh in last week, you can weigh in again today. Because here's oil sitting right at 70, which is a key level. Are we going to bounce and move back to the upside, perhaps up to that previous wave 4, or are we going to break below and head down and test that low? Everybody's heard all the rhetoric out of OPEC on cutting production. They want the price to be back up. I've brought out the opinion of, yeah, but if demand goes down, if we do move into a significant recession and demand falls off, I don't really think it matters how much OPEC cuts production. If the demand's not there, it's going to weigh out over the supply issue, in my opinion. But we'll see. 70 is going to be key. So for any hope of a move back to the upside, I know some people have some pretty high targets on where oil could go with those production cuts, but it's got to bounce back off of 70 first. We'll see if it's able to do that. Thought we'd bring in a new one now. Dr. Copper we haven't looked at copper in a while, but that was brought up both in TradeFinder and it was brought up last night in our insiders meeting, which we do every Thursday night for our alert subscribers. So alert subscribers only, and we do an extended Q&A on Thursday nights. But it's always been viewed, copper at least, as a good economic indicator, hence where it got its nickname Dr. Copper. Well, you can see what's interesting about the chart of copper right now is we have a pretty nice symmetrical triangle formed. I think the directional breakout of this triangle is going to have a lot to do with where the economy goes moving forward and therefore the markets. A break to the upside and perhaps an end of the Fed rate hiking cycle is in sight, and you could see the market starting to get in front of better economic times and better times for the market. A break to the downside, and I think we have more pain to come. So which direction do you think copper's going to go? Be interested in your opinion. You can post it underneath this video. significance of it, if you think there is. Copper breaking to the upside, is that positive economically? If it breaks to the downside, is that negative? I mean, do those old adages hold true? What are your thoughts on good old Dr. Copper? Looking at Australia, same thing as our markets. Reversal day yesterday, back to the downside. And the key is going to be here. Can the EWA get back above 20? We're awfully close to testing that wave 5 low, which is right at a strong fib level of 61.8%. Seems likely that we'll probably test that level next week. But if we get back above 20, then we can start talking about a potential move back up to the next resistance level, which is not far away at 21. The EWC for Canada, almost the exact same story. Coming back down, looking to test on differences. The wave 5 is much lower on the EWC than it is on the EWA, but again, looking like we may come down and test those lows. The key level here on the EWC is 31, and you can see we broke that pretty significantly today. If you put the 10-day moving average on there, not really oversold there either, so looks like we're going to test that wave 5 low sometimes next week. And then last but not least, India. You can see that the wave 4 has been disqualified. So this 5-wave impulse pattern is disqualified. So we take the Elliott wave pattern off there and we start looking for support resistance. And you can see that 41 didn't hold, so 40 is now the next level. If we can't hold that, then we're looking at the consolidation that occurred around those June lows down there around 39. If we break back to the upside, it's got to get back above 41. So 41 was really key as far as support resistance. So old support becomes new resistance, and it's proven to be resistance since we broke through it there in early October, having trouble getting back above that 41 level. So do we give way and come down to 39? Kind of looks like that's the way things are going to play out. Hope you have a great weekend. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.